Hey folks, Anthony Owens here with McKee Financial. Thrilled to kick off this episode of McKee's Market Movers. Before we dive in, a quick disclaimer. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.
Hello, and welcome back to McKee's Market Movers. I'm Josh McGlothlin, your wealth advisor at McKee Financial. In today's episode, we're going to be breaking down what led the markets in January 2025. So far, we're off to a great start, with the S&P 500 hitting fresh record highs and closing out the month positive. Notably, the equal-weighted S&P outperformed, showing broader participation across the markets, which is always a healthy sign. Historically, when January ends positive, this leads to the market ending the year positive about 89% of the time. Now, while these gains were welcome, it certainly didn't come without volatility. Shifting economic data, evolving rate expectations, and lots of uncertainty out of Washington all played a key role in keeping investors on their toes. December inflation data came in mixed. While inflation did increase, the overall numbers either met or beat Wall Street expectations. One thing that we did notice is we're continuing to see cooling in shelter costs. This is going to be a key trend that we'll watch in the months ahead. The Federal Reserve decided to keep rates unchanged. This was widely expected, and overall, the meeting was uneventful. The biggest story in the month revolved around the labor market. Non-farm payrolls came in at a red-hot 265,000 versus expectations of 165,000. Now, this led to yields and the U.S. dollar to surge, putting heavy weight on equities, with the markets pricing in even fewer rate cuts for 2025. So what should you take away from this? Well, we believe the Fed is going to continue to take a very cautious stance, and as of now, the markets aren't pricing in any rate cuts until at least June of 2025. Despite concerns around inflation, the consumer remains resilient. We see this in the market performance when we look at the consumer discretionary sector continuing to outperform the consumer staple sector. Basically, what this means is the consumer is out there continuing to buy what they want versus what they need. The housing market is continuing to feel the weight of these higher rates. December existing home sales came in weak, missing the mark by 5% year over year, and even worse in areas out west and in the Northeast. January also brought us a shift in power with the Trump administration returning to office. Now, with any transition, the market's going to be looking for any sort of changes revolving around the budget, taxes, and trade policy. Now, with this uncertainty, we're expecting some significant market swings in the months to come. Beyond politics, another major market mover was within the tech sector. China's DeepSeek AI model rattled investors, not necessarily because of its capabilities, but due to concerns over the scale of capital investment compared to U.S. big tech. The initial reaction was to sell first, ask questions later, but as the dust settled, U.S. tech leaders reassured investors that AI's long-term trajectory remained strong. We're now entering year 3 of today's bull market. Traditionally, bull markets will last about 5 years and gain 160% over that time frame. Now, that doesn't mean there won't be bumps along the way. For 2025, we're expecting increased volatility and probably some more modest gains. As we move into February, we're going to be putting a wrap on the earnings season. We'll receive some fresh economic data, and I'm sure there's going to be more news out of Washington making headlines. It's worth noting that February ranks in the bottom third when it comes to performance, so we'll see if this year follows that trend. Through it all, my message remains the same. Staying out of the market for near-term worries has and will always be a costly mistake. We don't invest off forecasts or predictions. We invest in great companies with long-term staying power. That's all for this month's McKee's Market Movers. Thanks for watching. I'll see you next time.
Securities offered through LPL Financial, member FINRA SIPC. Advisory services offered through Gladstone Institutional Advisory LLC, a registered investment advisor. Gladstone Institutional Advisory and McKee Financial Resources Inc. are separate entities from LPL Financial.